You have not been on the pod since December 17th, 2021, which is pretty amazing.
Wow.
Yeah, and you and I, we probably see each other 2 to 3 times a week, so it's very odd that we haven't potted together. But what we want to try to do is actually have a conversation with mics in front of us, not too dissimilar than what we do over maybe a steak and a martini or a Comos or something like that. Does that make some sense?
Yeah, it does. Good burger missing from this
Oh my God.
scene, but
you know,
I'll do
I'm
my
kind of
best.
off the
Do my
burger
best.
on the GLP-1. Last time we went through, and we'll put it in the show notes so we don't have to get too much into it. We went through your pre-CNBC career. We went through some of the things that you're really into, and you guys have to go back and listen to this. So some of his, you are a sports memorabilia collector extraordinaire. Is that fair to say?
Yeah, used to be.
Yeah. And
Used to be.
That's true. Now you just go to some very cool sporting events, and every once in a while I get to tag along. You get to interview, and we're going to talk a little bit about this. Some of the folks, not being a so-called sports caster, but you have this tremendous network of sports folks, and you get to talk about them. They actually come on their show, and they're fans of your show, which is pretty cool too. We're going to go back and talk about some of the formative stuff and being on CNBC and some of the things that we've seen over the last 15 years. Let's start here. Okay, you started hosting CNBC's halftime report, I want to say 2010. Does that sound about right?
I feel like this, maybe a week ago, was our 13th anniversary.
Cool. And before that, it was just kind of like a segment, middle of the day, which is super cool because they kind of built it out as a show. And one of the things I think is pretty fascinating, you and I met on the set of Options Action and Fast Money. You were like, as a reporter covering a lot of market stuff, you were the go-to fill-in for that. And it didn't take them too long to figure out if we're going to go for a full hour on halftime, Scott's the guy. So that was pretty cool.
Stars aligned.
All right,
at the right time.
Let's talk about this because the last time you were on, you were not hosting also the closing bell, so you got another show. Let's talk a little bit about what it was like to take the mic for a show that had very high expectations. Let's be really clear, because Fast Money at that point had been running for 5 years or something like that. It's the only show on the network that had a sort of panel of market participants, and all of a sudden now you got these 4 guys and gals around you looking at every tick in the market while it's open for an hour midday. Talk to me a little bit about what that was like, because that is not an easy sort of assignment at CNBC.
No, what I think you guys at 5 were the template for, how I thought halftime would end up being. You never really know until you have the people in front of you and you try and develop a relationship and a rapport with them, which you guys have so well and have had for seemingly forever on Fast Money. So, it's the pacing of that kind of a show is a little bit different. You got to move the ball around. You try and throw it to a receiver in a place where they can catch it and then give you something back, maybe run with the ball a little bit. So I think I had a pretty good idea of what I thought it was going to be like, but until you actually get there and put your own stamp on it, you never really know. And here we are 13 years, as I said, later, and I feel like we're as sharp as we ever have been.
Yeah. It's funny. Do you ever go back and watch any of those early videos?
I do not.
Because it would be kind of cringy, right? Isn't that
not
crazy?
kind of cringy.
No,
That would be very cringy.
It's kind of crazy, but it's not too different than being an athlete in a way. It's like you could be performing on a very high level, but you want to get better every day, every week. You know what I mean? Like that sort of thing. So talk to me about 13 years ago. It felt like there was so much PTSD from the financial crisis, even years after it. And I kind of remember in my head, it was kind of a rolling financial crisis. By the time that the S&P bottomed in 2009, or so, I think it was kind of April, it kind of moved over to Europe, and then it moved into Southern Europe and that sort of thing. And I felt like we were kind of in crisis mode for a very long time. The U.S. markets were kind of in better shape because, our government came in and backstopped the worst parts of it. But what was that like in a way? Because it was just kind of in the wake of the financial crisis, and people were still trying to figure out an awful lot at that time.
Yeah, I didn't really know what the aftermath of the financial crisis was going to be, or how it was going to frame the kind of show we were going to do. It's funny. I feel like even today, people have PTSD about the financial crisis, whereas there have been different little flashpoints that have happened between, let's say, the financial crisis and now. in the anthology of how long I've had the program. And I find that the first thing that people go back to is they want to call everything the next financial crisis. So I think it informed all of us on what the major risk factors are, and maybe it also informed me on how to have maybe a more critical eye towards people's opinions and picks and whatever on the program, because a lot of people got hurt really bad in the crisis,
and not just retail investors.
No, everybody got hurt. Everybody got
yeah.
hurt. So I think in the aftermath, I just feel like there was a heightened responsibility to really, press people on their views, because we're not talking about monopoly money here. We're talking about real money. At the end of the day, people have to make their own investment decisions. I'm sure they try and inform themselves at least a bit on what the folks around my desk say, and then do their own research. But the responsibility that comes with actually recommending stocks, and then the responsibility on my end of, making sure that they articulate their views, and I press them on, why they have the beliefs that they do. I feel like the financial crisis probably made that more important than ever before.
Yeah, so it's interesting though, because we're talking about just how so many market participants, how formative the financial crisis was, and go look back 100 years. There's been a handful of them. You have to really go back 100 years to see some of the ones where it felt like the whole financial system could come down. Obviously, that was 29, and then the depression that kind of followed. I joined a hedge fund in 1997 that was a momentum hedge fund. It was SAC Capital, and these were some of the best momentum traders. They really weren't doing, long-term investing at the time. A long-term trade might have been 2 weeks into an earnings report or something like that. And it was just amazing that sort of flexibility to be able to be that nimble. Every crisis, whether it was, I don't know, it was like the Russia crisis or the Thai baht crisis or long-term capital. These all presented opportunities, and rarely was a fund like that on the wrong side of it. But this is kind of an interesting through point for you, because, fast forward to the folks that you have, and I know so many of them, and I think they're just great, market participants and commentators. And we'll talk a little bit about the commentating in a second, divorcing yourself from the market participation, because they're kind of two different skill sets, and you're talking to different people. But the dot-com bubble, when it burst, there weren't so many prominent voices in the investment community that were speaking about this stuff. And to your point, everybody got hurt. It was a protracted bear market. The market topped in the spring of 2000. Nobody thought the NASDAQ would go down 80% and the S&P 500 would be cut in half. And it took, 2.5 years to kind of play itself out. So fast forward to the financial crisis. And again, the Fed chair was saying everything's contained and this and that, whatever. And all of a sudden, these big building blocks just started going down. And then we saw a bazooka. I hate that expression really, but, for the Federal Reserve going to zero, all the stimulus, that sort of thing. And then there were some more prominent sort of voices at that time. So talk to me a little bit about that. You have a great knowledge of history as it relates to the market, clearly over the last 25 years. But that's been an evolution, don't you think so, of market participation and commentary to some degree?
Well, I feel like the maybe peak of that was the peak of activism, because the kinds of people that you're mostly talking about were the ones who were willing to be so public about the positions that they had because they had an incentive to do so, right? They had a position in a company. They wanted to be public about what they were hoping to achieve. So, that was, I don't know, a handful of years ago, maybe a little bit longer than that, where I feel like it was the peak of that period where, when I first started the program, you obviously had well-known activists. I didn't have really many relationships, if any, with any of them. So it didn't really become a central part of how I thought about the markets and the people who make them move, until the obvious fateful day of
we got to talk about that.
Of January 25th,
you probably don't get to talk about it
2013.
so much anymore. You wrote this amazing book, When the Wolves Bite. When was that? It came out in 2018. It was about 6 years after that fateful day. And so I've heard you and I've talked about it. but all of a sudden you've been really focused on the news of the day or whatever was coming up. You had a panel of folks, kind of breaking it all down. You're pushing it back and forth. And all of a sudden you have two of the biggest activists, let's be really clear, in one of the weirdest situations in my whole career to that point. I'd never seen a situation where there was started with an activist short, and then it was met by an activist long, and both of these guys, billionaires, running billions of dollars and just going head to head in the press. And, it was pretty fascinating.
It was. I mean, up until that moment, the focus for me and my show was, as we talked about already, just trying to establish myself as the host of this program with an ensemble cast. I didn't really have any, well-known, masters of the universe on my program to that point. So it wasn't really something that I focused on at all. I didn't have many relationships with any of them. And then, that event happened, which was, it was a mix. Everything has a little bit of luck to it. But, if I didn't make the initial reach out to one of the parties, that day doesn't happen. And then, as I said earlier, the planets sort of aligned, the stars aligned, and then, this thing happened where, Bill and Carl were fighting for 20 whatever minutes on live TV, and trading volume on the floor of the New York Stock Exchange literally came to a halt, and people were standing there watching it. Davos was ending. It was the Friday of Davos at the end of the week, so people were catching up and hearing it in Davos, and obviously word was spreading that there was this thing happening on CNBC Live. You got to turn this on. You got to check it out. So it was a really unprecedented event, that I found myself in the middle of. And then when it was over, I used the opportunity to reach out to a lot of people that I always wanted to meet or talk to, but never had the opportunity or the wherewithal to reach them. And that's when my Rolodex grew, and part of the focus of my program was sharpened to the point of, okay, I have an ensemble in front of me, these market participants who are talking about stocks in the markets every day. But now if I can take it to a step, higher, to some of the most well-known market participants in the world, then we can, take the conversation to another level. Becomes like a real money, real debate kind of a deal, where you've got the best-known billionaire investors coming on the program and helping, me and our viewers, but certainly the credibility of the show.
That never happened before, Scott. Like, most of those folks that you started bringing on the halftime report were kind of like squawk box sort of guests. You know what I mean? Where the markets are not open, that sort of thing. And they come on and they have the opportunity to kind of lay out more of a macro view or something like that. What happened, this whole thing started with two guys battling over a $5 billion market cap company. And I think that many market participants had never heard about. And it was one of the first meme stocks, if you will, too. So that's one of the things that to me was so fascinating. And then fast forward to the fact that, there's no shortage of these guys. Tepper used to coming on and just talking about the markets in a way I think was much more useful. I'm not saying that wasn't more useful, wasn't particularly useful, that conversation between the two of them. That was like entertainment for a lot of people. It was a lesson in psychology and market psychology and everything like that. But once you started having these other people speaking to more of an active trader, environment while the markets were on, lots of stocks moved. There were days that markets moved, right, off of some of the commentary. So speak to that, because there's a greater level of responsibility when you're having some of the biggest market participants come on your show, and they have the ability clearly to move stocks, but possibly markets.
Yeah, I think therein lies the responsibility of just not letting people, come on no matter who they are, and give a stock pick or their point of view. It's pushing back, make them really make their case. I remember many, instances, obviously where somebody would come on, where Carl Icahn would come on. I think he came on right after he had tweeted, I think it was just sent a letter to Tim Cook.
Yeah.
at Apple.
That was 2014.
Plan on
probably, right?
he had a good conversation. Plan on doing that again or
Yeah.
whatever. I'm paraphrasing because I
Yeah.
don't remember exactly what it was. But then Icon came on our show and talked about it. And obviously when people like that come on your program and they're talking about a stock and you see what I love is what's really unique about CNBC and that role of being on when the market is open is the intraday chart where you literally see somebody talk about. Now it happens. It always happens now too. I mean, in pre-market, the
much lighter volume. I mean,
sure,
to move
but
a stock intraday, it's got to be real volume.
yeah, but I mean, if anybody came on and they do in the morning and talk about whatever stock, obviously you see it move, whether there's a lot of volume or not. It's the power of the platform for certain, and the ability that we have, I think, to show it. It's like our highlight reel. It's like our toe tap catch in the corner of the end zone for a touchdown is that intraday chart that shows you a move when somebody's on. But again, with that comes a responsibility that, okay, stocks are moving. You really, you don't know how long somebody's going to be in a position. I think you have the responsibility of trying to probe as much as you can on how long someone plans on being in that position. You don't want somebody at home to be like, oh, well, so-and-so activist said they're in this name, they're pushing for a buyback or whatever. I'm going to get in too. If a week from now, the person who just came on your program is already out of the stock. I mean, as you said earlier about your days at SAC, the reason why the Steve Cohens and the David Teppers and the Stan Druckenmillers and on and on and on are as great as they are is because they're tactical. What they tell you today could change tomorrow.
Yep.
And that's the genius of them. They can change their mind based on the changing facts. That's one of the things that I've learned, I think, more than anything else about those types of investors over the years. They're so tactically good that whether it's a sixth sense they have about the markets or their ability to, disseminate information, to distill the most difficult, hard to understand stuff down into the most easily understandable stuff, I think that's why they're as good as they are.
And it's rigor, and it's also like a process. I'd love to hear a little bit, everybody in this business, you better have a process, and you better have it like stress tested over time, and you better be adaptable. I make some of the same mistakes that I made 25 years ago that I make now. Now that was more of an institutional setting. I don't have the sort of guardrails and risk management that I think I would like at this point. You know what I mean? But, you and I had a really interesting dinner a month ago, and I think it's fascinating. We'll get into this maybe a bit more later. A watcher of your show, a viewer of your show, this guy named Al Michaels. Al Michaels is a legendary, sportscaster. If you guys are into sports, he's covered everything, and he's done it at the highest level for 60 years, maybe 50 years or something like that. Now, we asked him, what is your preparation? Right? So all of a sudden now he's doing Thursday nights NFL on Amazon. Is that different than doing, for years he did hockey, for years he did baseball? What goes into it? Because if you do a once a week NFL thing versus, let's say, 5 nights a week baseball or something, it's very different preparation. Now he gave us, we're not going to share it with you people. You're going to have to listen to that on an Al Michaels podcast or something like that. But he has a very rigorous preparation. He takes a lot of, he takes it very seriously what he's going to say on this thing. Talk to me a little bit about your preparation, because people ask us all the time, what are you waking up and looking at? How do you formulate ideas? How do you stress test those ideas, that sort of thing? And you're not a market participant, but you're about as well sourced as anyone that I know in the market. And you have a responsibility, as you just discussed, to really get to the main points and make sure the information that's being relayed to your viewer is something that is going to be helpful, and it's going to be something that's very credible. Because if you don't have credibility in this business, you just can't be on TV for as long as you have, or you won't have a job in a trading seat, having the opportunity to trade someone else's capital.
Yeah, I try and read as much as I possibly can from the minute that I get going. Whether that's being on top of the news that's going on, reading, upgrades and downgrades, reading analyst notes. The beauty of the markets, in my mind, is that they don't really change that much. Let's be honest. And I tell this to people, when they ask me, what time do you start preparing and how do you prepare for your show? The market has a nuance to it every day, unless there's a major event, obviously. But by and large, it's a little bit of a nuance that if you feel like you understand the markets and what's happening, it could be a little thing that happens here, but it doesn't affect the overall, trend whichever way the market's going. So I try and keep that into perspective too. And then I talk to real market participants, some of the people and the names that I mentioned to you, earlier, and others. I may talk to them offline. I may talk to them on background. I may just, give them a shout and say, hey, what are you thinking about? To help me better inform, myself on what's really happening in the markets. And as I said, the most important thing, in a complicated financial world is being able to, describe things for people or help them understand what's happening in the simplest of ways. It certainly helped me. I like to be informed in the simplest of ways. I just feel like, none of this is all that complicated. And some of the greatest investors in the world have helped me better understand what's really happening in the markets. And I feel like I can use that knowledge to translate it and transfer it to the viewers who watch my show. So say, hey, so-and-so just, now I won't obviously say who their name is, but, hey, so-and-so just told me that they're long the Russell. They think it's actually going to start moving. They bought some calls out into early next year. I mean, I think that kind of information is helpful to me and the viewers. It helps me just think about the kinds of questions I want to ask, or to have an idea of where flow is going from big investors. Because I guarantee you, if that one investor is thinking that way, he's talking to other people too.
By the way, that also goes back to credibility because, and oftentimes you have the license to actually use their name. You've broken in on, it's usually activist sort of stuff too, but a lot of people follow those whales into activism because they know it's not a short-term trade, right? If a 13F or, Nelson Peltz, for instance, he's like the famed activist investor, and without, discussing any of the situations, but he comes out, he tries to push for change. Usually it involves board seats and the like, and it can be, acrimonious, at times, but people follow them into those trades, you know what I mean?
Yeah, but let me just say, I probably talk to those kinds of people 25 times more than they come on TV. Again, if I'm talking about a specific story or stock, I want to be as informed as I possibly can. And
so you're checking it with other folks, seeing what they have to think about, like the situation or that sort of thing.
Sometimes I'm trying to talk to the people who are involved in the very situations to just have a better understanding about, what is actually going on. If I have a better understanding about what's going on, I can ask better questions to the guests who are coming on the show. I can have a better roundtable conversation with my panel. I feel like the viewer is smarter if I make myself smarter about certain issues. So I like that, the process of, what looks like, a nice refined dish on TV is a bit of a sausage making process behind the scenes. But I feel like you put more ingredients into actually the process of making it, it's going to come out and taste better on the end.
It's interesting that you just mentioned this about a minute or two ago, that the markets are generally pretty similar, right? It's the nuances on the edges. That's the stuff that changes some of the stories, some of the names, some of the market participants, that sort of thing. And one of the first books that anybody who enters the markets in a semi-institutional fashion, but even some of these prosumers and the like, they find themselves reading a book called Reminiscence of a Stock Operator, is by a guy named Edwin Lefebvre, okay? Not like Brett Favre. It's spelled L-E-F-E with an accent, Ogu or something like that over it, V-E-V-R-E, okay? Edwin Lefebvre. But it's about a stock trader from 100 years ago named Jesse Livermore. He's one of the most famous traders that has existed, and he actually is considered like the father of day trading. He was like, just this amazing young story. They used to call him the boy plunger. He started, being a tape runner, this was the early 1900s, but he has a quote that you'll hear again and again, and it's really speaks to exactly what you're saying. Another lesson I learned early is that there is nothing new in Wall Street. There can't be, because speculation is as old as the hills. And so it's interesting. It's about psychology. It's about risk taking. It's about risk management. So I always love that, that quote, because it really does speak to, no matter what the crisis is or what the bull market's in front of you or what the excitement around a secular shift, it's been done before. You know what I mean? And that's one of the things that you can always apply, and it's going to be a little different, like history rhymes, it rarely repeats, that sort of thing. And so with all that being said, you kind of have a reputation for being a bit dogged. Like, you don't let things, kind of like skirt by. Okay. I know that you have a great memory. I know that you believe that it's really important, for the viewer to hear, like someone defend a sort of view, right? And it goes back to rigor in a way. Where did that come from a little bit? Because I think about like ESPN, like one of and I know he's very controversial. I love Stephen A. Smith. I love the energy that he brings. Now, he obviously makes some very big opinionated views. You don't offer an opinion. What you do is listen to what somebody is saying, and then you'll try to figure out what is the opposite side of that. And do you do that because you think it's beneficial to the viewer?
I do.
Obviously, you're very curious anyway.
I play devil's advocate on anything that anybody says. Where does that come from? I don't know. I mean, I've probably been arguing sports and stuff like that for my whole life.
With your son Dylan, by the way.
So,
because,
probably that just is what my personality is like. I like a good debate. So I don't mind. I certainly don't mind mixing it up. And I do feel like there's a pretty good dose of curiosity. Like, I'm generally and genuinely curious about people's points of view. And I think a good debate is good. As I said before, real money, real debate. We're talking about real money here. And there needs to be real debate. There should be a vigorous debate. And I don't care what side somebody is on. Mm-hmm. I'll always play devil's advocate for the benefit of the viewer. I feel that's what what this whole deal is about. My opinion doesn't matter. Mm-hmm. If you say, the market's going up, I'll come back to you with, well, what if this happens? Or, well, that's not what you said, a month ago.
What do you say to people? Because I so often get people pinging me on text or whatever, and they'll be like, your boy Wapner, you know what I mean? Like, it always starts out with your boy Wapner. And that to me is probably like, that's got to be the biggest compliment in a way. You know what I mean? Because that means that something's going on. It's not some program or some conversation that is just, you know what I mean? Like, it's something that's being teased out. That makes some sense. Do you hear some of that yourself?
Yeah, I do. But I take pride in that. I like mixing it up. I feel like people get something out of that. I feel like that's what people want, because they're thinking about this is their own money. Mm-hmm. They they're not going to let somebody just show up and say whatever they want. They need to be pressed. They need to be held to account.
Yeah.
And I feel like that's part of my job. That's part of my job.
Well, so obviously, going back to the situation in 2013, Icon Ackman, you write a book about it. I think a lot of folks, that's over 10 years ago now, but it's still something, it's part of your DNA. I mean, a lot of folks remember that, to your point, where I remember being on my trading desk, and when you say things halted, they halted, and let me just say this to the listener. If you haven't read that book, you got to read that book, and we're going to give away a bunch of those books. We're going to give away 100 of those books to the first 100 people that leave a review for the On the Tape podcast. They send a screenshot of that review to contact @riskreversal. And you know what's going to happen? Amanda is going to send you a book. Now, here's the deal. You're going to get it from Amazon. Leave a review of that book. That's how people find those books and stuff like that. So I love that book, and I hope you all read it. How's that?
Well, I appreciate you.
All right. We talked a lot about markets. We talked about your preparation. We talked a little bit about your history, but we got to talk about, we kind of alluded to it, your love of sports. And in that last podcast, we talked a lot about, how you came up in the business. So definitely go back and listen to that. You were doing a lot of really cool work as it relates to sports. You covered a lot of really cool events, including Olympics. I want to say that's when I first saw you on CNBC. Was it 04 or 08? 06. Okay. Amazing. But you have a love. Well, you got a lot of loves. I mean, the Commanders, you grew up loving. Your baseball team was always curious to me. It was the LA Dodgers. Yeah. So here we are. We're recording this on a Monday. Last night, the Dodgers clinched going to the World Series. Saturday night, the Yankees clinched, going to the World Series. This is like an epic old school battle. Brooklyn Dodgers, New York Yankees.
It's the first time that the Dodgers and Yankees have played each other in a World Series since '81.
Which is crazy.
So, I grew up a Dodger fan in Maryland, of all places, because my dad grew up in Brooklyn. And in the late 70s, when I was, getting to the age where I was starting to like different things and, I started, liking sports, the Dodgers and the Yankees were the thing. They played in the World Series a couple of times in the late 70s. So I obviously watched those games. My dad was rooting for the Dodgers, so I was rooting for the Dodgers. And then, I just became a diehard Dodger guy. When I started collecting baseball cards, I wanted to collect the Dodgers back in the day. I remember mowing lawns and saving the money so that I could buy a Jackie Robinson card, which I still have.
Wow. What year was that? Like what
it was a 50, 56, 54, something like that.
Yeah. Wow.
So, I always had this love for the Dodgers and, nice to win a World Series here and there. So here we are.
Yeah.
All that's old is new again. It's going to be a great matchup.
So when you think about it, I know you really love the stories of individual players and the like here. What do you think of Shohei Ohtani? Because he's one of these guys.
What's not to like?
He's just such a unique talent, huh?
Yeah, he is. I saw him once at Yankee Stadium earlier this season. Dodgers came in for an interleague game. Saw him against the Yankees. Dodgers actually won that game. I think it was in extra innings. But he didn't do anything that night, 0 for 4 or something like that. But it's going to be exciting. If you are the commissioner of Major League Baseball, not only do you have two big market teams, but you have a collection of some of the most marketable and popular global players. Global. What Ohtani is going to do for World Series viewing overseas is can't be overstated.
Yeah. What are they expecting as far as viewership?
I don't even know.
Japan.
But
it's going to be off the hook.
Yeah.
Yeah.
Judge and Soto for the Yankees, Betts and Ohtani for the Dodgers. You couldn't have more star power. The global nature of where all major sports are going now is going to be incredible. I'm sure ratings for this World Series here domestically are going to be the highest they've been in I don't know, years minimum. Because what more do you want? East Coast, West Coast, Dodgers, Yankees, the best players, really playing the best too. Like Soto had an incredible year. So did Judge, and Ohtani did as well.
Yep.
That's going to be. I can't wait.
All right, let's talk about this really quickly, because you're a money guy. You talk to big money guys. A lot of the guys you talk to actually own pieces of or they own professional sports teams. What do you make of the way these valuations have just been skipping higher? And it could be, Premier League and or a whole host of other European soccer teams. But here in the U.S., it seems like there's massive scarcity value. Mm-hmm. We hear it less in baseball. There's obviously the big market teams, that sort of thing, and obviously some of the ones in the middle. But the scarcity value makes it so, they're just going to keep going higher and higher. It's the NBA and the NFL, seem to be, at the forefront of this. Is like, you do some reporting on this. Like is this just such a unique scenario? Because like risk assets are risk assets. You know what I mean? But like there's a gazillion stocks. You know what I mean? There's a whole host of different real estate sort of plays and the like. These have like lots of like those aspects all built into one. And I'm just curious, like thoughts on the way these valuations are skipping.
So it's definitely scarcity value. There are only so many properties and only so many people who can afford them. Mm-hmm. By virtue of how the investing rules have been, it hasn't been open to, broad populations and sources of wealth. Mm-hmm. Now that's obviously changing. The other leagues had already allowed private equity and the like to invest. Now the NFL is going to also. So now, you've opened yourself up to even wider pools of capital, which theoretically will keep valuations only going up. TV contracts continue to escalate to an incredible degree, which only supports valuation. Of the 100 most watched TV programs last year, I don't know, 90 something were NFL games.
Yeah.
So as long as there's the demand, the capital that exists around the globe and this scarcity value, there's only 32 NFL teams.
Yeah.
And they don't come up for sale that often either. So when they do, it's easy to see why we just came out with our own valuations list, and we just launched a vertical called CNBC Sport, because sports as an investable asset has become a legitimate asset class in its own right. And you have the Dallas Cowboys north of $11 billion. Why? For all the reasons that I said, but also the fact that, let's just take the Cowboys, for example, when you own the stadium, like Jerry Jones does, when you own the practice facility that he built, when you have when the amount of sponsorship that they get, right, America's team, the amount of merchandise that they sell, and then you have the ability, because you own the building, to have all of the other events, the Taylor Swift concerts and what have you, come into your building, and you're getting a piece of that too. That's why you have the kind of revenue and the kind of valuations that you do. The latest story was that Stephen Ross of the Dolphins was selling a small piece of his universe, which includes the Dolphins and the building and the F1 race, and they have a marquee tennis tournament down there. He's selling a piece, to private equity and Joe Tsai with an $11 billion valuation. Why? Because it's the additional revenue streams that they have. If it's just the team alone, it's only going to sell for a handful of billion.
But the thing about it, the Cowboys haven't been to the Super Bowl in like 20 years almost. I think it was 95 season, and they beat the Steelers. And then the Yankees haven't been to the World Series, one of the largest droughts that they've had. They've won 27 championships, but they haven't been there since 2009, and they won that. So it's pretty fascinating to think that you can have a team that doesn't win a ton of – the Yankees are very different, obviously, than the Dallas Cowboys, but an $11 billion valuation, but it comes to scarcity and then all the other opportunities to kind of make money. One thing I want to go back to really quickly is like, think about in the Premier League, really, it was once the kind of oligarchs came in from Russia and then some of the Middle East money, you know what I mean? Then the valuations went out of control. I think the PE thing here is pretty fascinating. It'll be interesting to see if the acceleration of those values, because of private equity, and then really there's going to be an opportunity for folks to get a piece of it. Now you have to be a very high net worth, person to invest in a private equity fund, that could have access to this, but it really has a feeling that this is going to get a little bit out of control.
Yeah. I mean, we'll see. Look, I hear from people who say valuations don't go up forever.
Yeah.
And, they would point out some sports that are out there now that are obvious shorts.
Yeah.
They would say. I would tell you that I have not heard that from anybody about any of the big sports.
Yeah.
But sort of rising tide has lifted a lot of boats. There have been a lot of, sort of secondary or third or fourth tier leagues and sports that have had a huge jump in valuation as, we've been flush with money. We've been in a bull market. If the tide ever does go out, the NFL owners are going to be the ones certainly with the clothes on.
Yeah.
We'll see what happens with some of these other sports, but it doesn't look to be slowing down anytime soon. There's no reason that it theoretically would, unless you have some existential event. But even then, if you say, well, what is the recession-proof business? You couldn't go to the dictionary and point out, see NFL franchise here.
Yeah, well, it's pretty fascinating what Steve Cohen has done with the Mets. They were about to put him in the kind of Dolan sort of camp as far as owners, and the moment that he stops, or I think he stopped trading, I think he put an announcement out. Obviously, it's still like a $30 billion fund, and they have some of the best investors in the world, but he said he was going to take a step back from the actual investing/trading side. And the Mets had one of the best seasons from the All-Star break. Since that happened, they make themselves to the NLCS. They didn't obviously have the best showing, but it was a big improvement.
Well, because I think he learned a little bit about the differences between being on the Mount Rushmore of stock trading and running a sports franchise, where you go out and you get at the beginning all the shiny toys.
Right.
And sometimes the shiny toys don't fit together on a team. And I think he learned that and sort of changed the way he was thinking about the building process. Not that he was, not willing to spend the kind of money that he initially did, but and I think you've told me this before, because you know him better than a lot of people from your past life. If a trade isn't working, get rid of it. I don't care what you paid for it. I'd rather take the loss than a bigger loss, right? So, there are a couple of players, high-dollar players that he signed that didn't work out, and he got rid of them. And he collected assets,
some Yankees, by the way.
younger assets, farm system assets, to where, here you are with an ability to turn the franchise around in a really short period of time from where they were pretty underperforming. I think that he just saw the light of, okay, there are some key differences between my day job and what it used to be and running a sports franchise, and let me make some adjustments and see if it'll work based on experience.
Yeah, what's so cool about this and why we just spent some time in it, because the private equity coming in, some of the largest investor types, kind of setting their sights on this. This is going to be something we're talking about for a long time. And I think there's probably going to be other ways for regular people to kind of invest in these things too. So pretty exciting stuff. All right, do you want to make a prediction really quickly on the Yankees? Here, do you want to come in on something?
Well, I was gonna tell you, as we spend most of our time talking about, stocks and bonds, mostly stocks, right? I talk about stocks probably 90%
more about
of the time.
The bond
right?
market now, man.
Right.
It's kind of boring too, right? The bond market.
But I will tell you that, as people look to alternative assets, and as I was suggesting, we have a vertical now to, really pay closer attention to sports as an investable asset, as its own asset class. And now you have private equity's ability to get involved with something like the NFL. So, if you can be an investor in a private equity fund that now has an investment in the NFL, so you actually have the ability to invest alongside some of the greatest investors who have ever lived in ways that you never had the opportunity to before. I think that's really, really exciting about the funds that are either getting into sports or have specialized in sports.
Yeah, it's fascinating. Everything for me comes back to Elon Musk. Not everything, but Elon, the $44 billion that he spent for Twitter, he could have bought like the AL East or something like that. If you think about it, I'm just saying, and it might have been like a happier pursuit. All right, Scott Wapner, really appreciate you being here. Great conversation. I think it's kind of fun for people to kind of peel back a layer of the onion, if you will. They see on TV most of the afternoon on CNBC. It's kind of really fun to hear your perspectives on some of this.
We didn't even talk about my first Pearl Jam concert.
Oh, let's do that really quickly. So, obviously you find yourselves on at least a couple times a month at some pretty cool sporting events here. But you also, you went to the most famous arena in the world. This was back in September. You saw Pearl Jam show. What do you think of that?
So I think I had a great underappreciation for the power and genius and star power of musicians. Just never really got into it that much. Not that I don't like music, but I just never really put myself in a position where I was going to see a lot of live music. We saw U2 together years ago. That was my first U2 concert, like my favorite band, and I never had seen them live. That just shows you I never made it a priority to do that. But I was looking forward to the Pearl Jam show, and it's no accident to me. Just like we talk about, the greatest investors in the world, it is not an accident why there is just a select few of the people who have become uber successful at whatever their craft is, be it on Wall Street or, in music and entertainment. And Eddie Vedder is certainly one of those people who falls into that category, and you can't fully appreciate it until you're standing there
and we're right down there
seeing him in the pit.
Yeah.
But you can't fully appreciate it. At least I couldn't. Until you see it happening live. The engagement with the audience, the music is, obviously one thing, but there's more than that.
Yeah.
He's not Eddie Vedder because he just sings well or writes good lyrics. It's a total package of all of this stuff. He does everything well. He engages with you. He makes you feel like he's talking directly to you.
He is talking directly to a lot of those folks down there. You saw that, right?
It's very, very cool.
It's so cool.
Yeah, it
well,
was
you
very
also
cool.
saw in the last year, you saw Coldplay in a massive arena, or you saw Coldplay in a massive stadium, and Chris Martin has that sort of vibe
he
too.
has it.
Yeah.
I have to say, I saw Coldplay at the Olympic Stadium in Rome this summer with my fam, and blown away by this guy.
Yeah.
You talk about entertainers and rock stars. Like I said, you look at somebody like that, or Eddie, or Grohl, or Bono, any of these guys, you're like,
That
rock
guy's
stars,
a rock star. Yeah.
rock stars, and it's not by accident either.
Well, people think I'm crazy that I've seen Pearl Jam. I think it was 8 times this year. And I was like, what I say to them? How many times did you go see the Rangers? How many times did you go see the Yankees? Like, why is that any different? And one of the things that's interesting is, like, I walk out of Madison Square Garden after seeing one of obviously my favorite band on the world. And, for the last 30 some years, it's been like the soundtrack of my life. And I was like, every time I walk out of an arena or a stadium and I see them, I walk out with a big smile on my face. And, oftentimes I'll walk out of Yankee Stadium or MSG after a really disappointing loss, and it's not guaranteed that you're going to walk out of it and say, oh yeah, that was an amazing game. We lost 5-2 or something like that. You know what I mean?
Yeah.
A little bit.
Yeah, of course. Yeah, you're going to be well entertained.
Exactly. So,
you know that.
To me, it's kind of like oxygen. I'm glad you and I got to spend that experience together. I think I probably kind of struck a nerve in you, so I think we're going to probably be seeing a lot more live music going forward.
That would be very cool.
All right, Scott Wapner, you are the host of CNBC's Halftime Report and the Closing Bell, 3 to 4 p.m. I really appreciate you coming in here. We did a lot of work. We, took a look behind the stage, if you will.
Pull the curtain back.
Yeah, we pulled the curtain back. All right, thanks for being here. Hope we'll do it again soon.
I hope so too.